Hey everybody, welcome to Stock Trading Pro. My name is Pete Renzulli, and boy, do we have a lot to talk about in the stock market today. But before we get into that, it's Veterans Day, so I just want to say a big grateful thank you to our veterans out there. I hope everybody is doing well, and just can't express how grateful all of us are for you. So today we're going to jump in and discuss, the picture. I don't know if there's any other way to talk about it, but the picture that looks like this, just so everybody has some context of what we're looking at. The CPI number came out yesterday and just completely obliterated what anybody expected. And what was really amazing, there was actually a couple of things that were really amazing about yesterday. And we're actually going to do a deep dive into our newsletter today and how we're setting up the entire week. Was the fact that the market closed on the lows the previous day on Wednesday. And I want to put this in the charts just to give some context. We're going to break it down, everything how we're looking at today and whether or not we should be aggressively looking to buy stocks today and whether or not the stock market crash is over, because we broke out of a level that we did not expect to take out. As a matter of fact, I drew the level on the S&P 500 on the SPY ETF the day before, heading in at the end of Thursday, saying we're kind of stuck in this box and it's going to take a lot of work to get out of it. But now we have two consecutive CPI reports that were interpreted after the number as bullish. An incredibly amazing reversal from the previous day. Now, what we want to talk about is we called yesterday what's known as a professional bullish gap, because the previous day closed on the lows. Not only did the gap take out the previous day, but it obliterated even resistance levels that we didn't expect it to take out. So I just want to put this in the video just so everybody has some context of what we're talking about. So you can see we're getting a little bit of follow through this morning, but this is the box that I drew yesterday and the one that we're talking about. So if you could visualize going into that, right, going into there, we actually end up getting what we call a swing high, a well-offered candle. We close on the low. Looks like we're going to head towards the bottom. But what we did is we mapped out that until we take out one of these levels, we're just in cash flow mode and we're kind of just trading back and forth. And then we get that. So one of the biggest things that I want to talk about here is we had a lot of people yesterday reach out to us on social media and say, I was surprised. You should not have been surprised that something was going to happen. Again, if you were long, you bought stock, you owned stock overnight, and you were swing trading, they got the gift that you could have been hoping for the entire week. Some of our swing trades just exploded through. But here's the thing, and this is really where you want to level up and you want to talk to yourself as a stock market money manager. Because if you have a trading account, that's what you are. And I really want to level up the thinking of what you're doing, right? You needed to know that that CPI number was going to be a big influence on the market, because it's essentially the entire point of what the Fed is watching right now. Other than the housing market, they're watching employment and obviously the inflation numbers. And that is the CPI coming back with how prices are right now is going to depend on how they're going to adjust that lever for interest rates to bring inflation down. So if you were not aware that was coming out yesterday, or if the potential of a monster move was not in your game plan this week, never mind yesterday, you got to really be on top of these kind of things, because this is just responsible money management, knowing if you should have been in a position heavy or if you wanted to even carry overnight risk. Remember, we're not getting paid by the hour to be active traders. We are getting paid by the month, by the quarter, and by the year. And as long as you stay away from those situations that don't have a high probability of definitely moving in the direction you want, then it's super smart, really, just to either lower your risk or not even be in it until the dust kind of settles. So that kind of takes us into the trading action for today. And are we expecting the stock market to follow through in a big way? Is the stock market crash over? Where should we be looking to buy stocks? All of that is what we're going to talk about today. There's a lot to cover today, and it's a shame it's a Friday. Like, we'll have one more big day of trading, and then we got to head into the weekend. I don't know, raise your hand if you hate Fridays because you love trading so much. So stick around. We'll be back in just 1 second. Okay, so thank you so much. What we're going to first do is we're going to do a little bit of a deep dive into our newsletter. So first and foremost, obviously, this is going to be in the context of this, and it's also going to be in the context of this. What a couple of days. If you take what it looked like heading into Thursday and heading now into Friday, your head must be on a swivel right now. We're going from one direction to the other, where the market's falling apart, to wow, we just broke out and we're looking on the other side of the market. A big thing I want to get across to everybody, and this is super, super important for active trading, is if the price action is moving too fast for you, or if the price action is confusing you on top of moving fast, you're not alone, because the market has really been less than obvious, especially the last couple of weeks. We just showed you that little box that we've been trading in. And I just want to make sure that you have that clarity, right? We've been kind of stuck in this box here. If we kind of zoom out on the weekly charts, prior to yesterday, we had buying, selling, and then kind of neutral. Yesterday really just vaulted that thing higher. So again, everything we talk about here is for educational purposes, but I really want to help you make good decisions. Anytime the market is not making sense, if the stock market is just like, what in the heck is going on? What I do and what I teach in our community is it's okay to be in cash. It's okay to say, I'm going to step back because I don't understand what's going on, and I'm not going to put my hard-earned money in the way, because the probability of profit targets getting hit are lower if it's not clear. Remember, the number one reason we choose to accept risk, the number one reason we choose to buy stocks expecting them to go up, is because we've stacked the odds in our favor, and we think that there's a likelihood, a strong likelihood of it moving in our direction. Now, likelihood does not mean all the time, but at the very least, we want to have a really good idea and build a good solid argument that we think it's going to go in that direction. So now I'm going to walk you through order flow stacking and how I game plan this out in our newsletter, which is the daily ticker. And by the way, it's Friday. The whole week is playing itself out. I want to give you the opportunity to see how I game plan and map things out during the week. So there's two ways you can do that. Our boot camp is actually starting next Monday. It's only $49 to get started. I'd love to see you on the other side. If you want a little bit more proof to figure out how our community is doing and whatnot, I'm going to give you an opportunity right now to download my personal newsletter for the week, which is the daily ticker. And I'm going to show you that right now. So if you want to download what I'm about to show you, I'm going to show you how to do that in just a second. So we're actually going to map out starting today. And you can actually see we have the entire week mapped out. Let me actually make this just a little bit bigger so it's easier to read. So coming into today, we're going to break down and look at the difference in advancing stocks compared to declining stocks from yesterday. Oh my word, just completely in the opposite direction. Actually, a really nice testimonial from Elihu since he came into the community. He's 6 times his initial deposits. I'm coming into our community. It's just, Elihu, I don't know if you're on the call right now. Couldn't be more proud of you. So anyway, stocks exploded after the bullish CPI report, leading many to hope that the Fed, now this is a key word here, hope that the Fed, we're looking for different language from the Fed right now, would start to taper the heavy interest rates. So now we're building reasons to choose to accept risk here, right? The reversal from the massive bearish to massive bullish caught many traders by surprise. A weak SPY with a weak close typically leads to more downside, but the CPI report was not a typical scenario. So let's actually stop there for just 1 second. We're going to talk about whether or not yesterday's report should lead to typical price action. One of the things that is something that a lot of traders need to learn is, but it was a bull flag and bull flags are supposed to go up, but it was a breakout and breakouts are supposed to go up. Yes, that's true under normal market conditions. Yesterday morning's CPI report needed you to say, this is not normal conditions, and that means I need to make decisions on what kind of trader or trades I want to place heading into that. Very similar to an earnings report. Do I want to buy a stock just ahead of its corporate earnings, or do I want to let the earnings come out and then make the easier trade after the order flow becomes obvious and we could learn how to read the tape? So I just wanted to touch on that before I continue to read down, which is yesterday was not typical. So again, think about this. It should have went down. Why didn't it go down? Because something else was in the market. So you needed to know that, okay? So we're going to keep going into the newsletter. All right, so we spent a great deal of planning. Now think about this. Our community spent a great deal of planning discussing overnight positions prior to the announcement. So again, we do this in our pre-market game plan meeting. We have SPY at 370, 390 mapped out to show the market was stuck in a box, and we'd be tape reading for new traders until that cleared up. So for new trades until that cleared up. So again, what are we doing now? What we're assessing in the pre-market meetings and what I give everybody in the newsletter every day is I'm showing you the current market conditions and what kind of profits we should be going after. Remember, We get a lot of questions all the time. What is order flow stacking and why is it different? Order flow stacking is us building arguments for the likelihood of a stock moving in the direction we think, but it's more than that. Order flow stacking also tells us what kind of profits we should be going after. Every trade is not the same. Just quite frankly, some deals are amazing and some deals are like, okay, maybe I can make a few $100 and I'll book that profit. That's the difference between order flow stacking and just being a chart reader. Technical analysis works. Order flow stacking is the next level because it's incorporating risk reward, but more importantly, what type of reward we should be going after. So I just want to really bring this home for you. What I'm telling our traders is what kinds of profits to go after based on this unique situation in the market. So if you happen to be managing your own account right now, you got to level up just a little bit and say what's available right now, because what's available right now will influence. Are you going to get in there with aggressive position size because it's A plus, the sun's shining in and everything looks great? Or are you going to say, you know what, this stock looks pretty good and maybe the group of stocks look pretty good, but the market's not really that obvious. And yesterday, oh my word, the big winner. Hopefully you've been following us throughout the week. And again, if you haven't done yet, please do me a favor, click and subscribe if we're providing some value for you. We talked about the solar stocks leading technology higher as it was kind of working its way up the pyramid. Oh, did you see some of the moves that solar stocks had yesterday? And again, this is working our way. And I'm going to show this to you because yesterday, Thursday, all right, this is going into Thursday, we broke down sector rotation. And on yesterday, we talked about basic materials, but mostly technology kind of catching a bid off of solar stocks. So yesterday, just to give you some context of one of those stocks and what happened yesterday, it was up 27%. Now, did we guess? Did we forecast? Did we predict? No. Our job as stock traders is to pay attention to order flow. Order flow is where and which stocks have institutional attention. Institutions are the hedge funds with the big money that push stocks around. Our job to make it really easy is we just follow them. And then we piggyback in a direction once we understand the optimal entry, right? So just yesterday, just this one stock, by being prepared, doing the game plan, the stock was up 27% in a day where the market was just amazing, but it followed through. That's the big thing. Now, seeing this after the fact is one thing. Seeing it prior to the market, because you understand what to look at, that's what makes you somebody special, because now you're no longer lost. You're saying the market did this. Here's what I'm looking for. The biggest challenge that people in the markets have, and really some smart people, are they're trying to look at everything. If you want the stock market to be infinitely easier, only look for certain things. Because when you're only looking for certain things, now you can say, look, there it is, or it's not there. I'm telling you, trust me, you will reduce your stress level by 80% if you only look for certain things. So this trade, this setup in our newsletter yesterday was mostly based on relative strength. Basic materials, and again, we've been walking basic materials through. You can see the entire week of how we're breaking things down. You can see where success leaves clues. Basic materials at the top of the list. Basic materials at the top of the list. Basic materials at the top of the list. Basic materials and basic materials. So let me ask you a question. What stocks do you think we've been focusing on all week? Don't reinvent the wheel. If that's where the buying pressure is, find a good spot, look for a good entry, and make sure it has good risk reward. It's easier when you're following the order flow and you stop feeling like you need to predict. Trust yourself. Nobody knows the market better than you if you know what you're looking for. Again, if you want to get my everything, including all my research, I would love to see you in our boot camp. Next week it starts. It's only $49 to get started. You can click the link below the video to learn about that as well. But I'm going to keep taking it further right now. Okay, let's keep doing a deep dive here. And we're going to actually go back into Friday. All right, so we're actually going to go back into today's price action. So now we're game planning how we're looking at trading the market today, right? So wow, did that upper level get smashed? So again, if we're talking about the SPY here and we're looking at the upper levels, this is the two levels that we just drew, and it just absolutely demolished that price action, right? So now we have consecutive bullish CPI reports amid the tsunami of bearish headlines. So now I want to bring that back. Trade what you see, not the predictions. So Raise your hand if you've been all over YouTube, watching YouTube videos, Googling everything you could possibly imagine, and all the headlines talking about Armageddon, stock market crash, we're definitely going down. And that might happen in a little bit longer time frame. But if you're an active trader, most people have their TD Ameritrade accounts, their Thinkorswim, their TradeStation, Schwab, whatever it happens to be. You're probably in there looking for extra cash flow. You're probably trying to make an extra $4,000 to $6,000 to $10,000 per month to supplement maybe what you're making at your full-time job. That means you're not concerned with where things are going to be next April. You're looking at where things are going to be in 5 days. And that's what we specialize in. We specialize in reading the tape and reading the order flow from day to day, week to week, and a little bit longer out between earnings reports. So you need to know which headlines matter to you within the time frame that you plan to make the trade. That's so important. Is a headline on inflation and the Fed important to you if you plan to hold the stock for a week? No, not really. Is that important if you're looking over the next 6 months? Probably. I don't know if Jason Hammonds is on the call with us today. Jason Hammonds does a really good job. He was a member of our boot camp, does a really good job of mapping out the macro picture of things. And when we spoke a couple of times, he had some really good insights on the big picture stuff. And I actually think he has a group of people that he hangs out with that discusses these things. So anyway, let's keep walking through. So the goal of what we're doing right now is getting you to think through the ideas, okay? All right. Could the long-term predictions on a crash be correct? Of course, but long-term, that's the big thing. But what's important is knowing your objective. So how long do you plan to hold the trade? We need to know which order flow we're trading so we know if it's still valid, so we know risk reward and direction. So what I'm going to challenge you with right now, and again, if you want a copy of this actually has Monday through Friday. You can also click the link below the video and you can download your own copy for it. You'll see below this video in the description where it says Daily Ticker. Go down there and download a PDF copy of this. I believe this week is a 51-page document where it goes through everything that I was looking forward this week. So hopefully it does two things. Hopefully it gives you a little bit of more insight into how professional trading works and how you can actually really level up what you're doing. And hopefully it gets you excited to want to come into our private Discord community and trade with me for a couple of weeks. I'd love for nothing more than to see you in our boot camp. So now we're going to keep working our way through, right? What we're doing is we're setting up and stacking the reasons to take risk today and going forward. So remember, if you're about to hit that buy button, you have to ask yourself, why? Why do I have confidence that it's going to go in that direction? That's what I'm hopefully walking you through right now. Okay. And by the way, this is what I do every single day. I'm on audio. This is literally what you get from me every day, on top of the coaching calls, on top of the game plans, on top of getting my strategy, on top of literally getting my research every day. So you really have to just pick the stocks and hit the button. So I'll show you what that looks like in a second as well. All right. So obviously this is really, really important, knowing which order flow, what time frame you're actually going to trade, right? So here's the thing. The 2022 order flow remains bearish. So let's not kid ourselves. This is a really nice move, right? But we have to take it in the context of where the year is. And this is the year. The year has not changed. The year is still clearly pointing down. We've had some nice rallies, and the moves that we're looking at right now are pretty darn cool, but the big picture is still down. We're still clearly on the weekly chart below the 50-period moving average, right? We are kind of hovering right at the 50 on the daily, but the big picture, here's the big picture. We're still pointing down, right? So again, I'm going to do like a little coaching session right now, a little bit of mentoring session. What I'm walking you through right now is how I teach you how to think through your ideas. And then when we have the game plan meeting in the morning, you get to post your ideas and I take a look and you go over them step by step: entry, stop loss, risk, probability, that kind of thing. So even before you place the trade, we have a chance to discuss it both in our Discord community as well as in the game plan. My mission, again, if you don't know, I had a trading firm in New York City. I had 300 traders. I haven't done this for 10 years. I kind of came out of retirement 2 years ago because I was kind of getting, the itch to help again. So our mission is to help you make better decisions. And if you're a little confused right now, obviously, I hope you hit that subscribe button and you're getting all the updates on YouTube. But if this kind of stuff interests you, where you're like, yeah, I really want to understand at a higher level and see that predictability in your account growth, at least download the PDF and click through to see what the boot camp's all about. You get the complete 14-week agenda. If it's for you, fantastic. I'd love to see you in there. Cynthia actually has been with us for a while. Good morning, Cynthia. How you doing? So anyway, let's keep going through the thought process for today, because yesterday's big move, A lot of people like, yeah, let's go get it. Let's add up how long that buying pressure has been going on, right? Okay, so we're going to keep moving through and walking it through now. So amazing short-term opportunities if you understand how to read the price action. So we're essentially talking about tape reading. So the S&P 500 is now well bid on the weekly chart. So what that means on the weekly charts is that now the weekly candlestick has higher highs and higher lows. So that is smart money institutions paying higher prices. But here's the thing. What does that translate to for what kind of risk we're going to take, right? Such a big day for the bulls to show. It wasn't simply a one-day wonder. So today we need the bulls to show, can we hold the bid? That's the phrase. When you're looking at the stock market today, your goal, your number one goal right now should be saying, can the bulls hold the bid? So if you don't understand what bid means, bid basically means you're advertising to buy the stock. So if your bid gets hit, you bought the stock, somebody sold it to you. So what we're looking for right now is we're looking for the institutions to hold the bid. So yesterday they held the bid and pushed it up and they kept paying higher prices. So what we're looking for today is if profit taking comes in, do they hold that price? So the minimum criteria that we need them to hold is yesterday's opening price. So yesterday's open is a really significant level because that's where the gap started yesterday. We closed all the way down here on Wednesday. Yesterday morning, we opened all the way up here. So if you want to learn the little bit of tape reading, you need to know, is price moving closer to or further away from a point? Now, you know how to do that already because you do that with your entry price. If it's going up, you're like, yeah. If it's going down, you're like, But our goal is to do that before we're into trade so we can measure the strength based on a significant reference point. So what you should be looking at today is yesterday's opening price. If we hold yesterday's opening price, both in your stocks, especially in the market, the buyers, the institutions who created that massive gap after the CPI report and held it, I'm going to get into that in a second, that means that they're still here. If they're still here, pretty darn cool. That means that they're interpreting going forward. This is pretty good news. So again, this is the simplicity of looking at the market. Do we stay above yesterday's opening price? Keep it that simple. You want to make confident decisions. Keep it that simple to start for right now. So let's keep working our way through. Okay. The last CPI report gave us a 3-week rally. So just to give you some context on that as well, what we're talking about is here. This was the last CPI report, and this is the price action after that CPI report. Now, even more important, if you want to really start to learn how to read the tape, you have to start factoring what kind of volume happened on the bigger day. So look at this volume. Look at this volume. And look at this volume. Pretty impressive. Pretty darn impressive that it was followed up. So remember, this is why we talk about order flow and not just saying the trend. The trend is kind of cool. It's a cliche, but if you know what order flow are the orders flowing into the market by the smart money and quite frankly, by us, by the public that are creating the technical analysis that we're looking at. So if you think about order flow and what I said just before about the opening price from yesterday and whether or not we hold that level, we are looking for order flow to hold the bid. So we're now looking at, does fresh buying come in after we have now had 24 hours to interpret that news? If it does, that's going to be pretty special. So now you know the level to keep an eye on and say, remember what we talk about. Is order flow obvious and is it still valid? As long as it stays above yesterday's opening price, we're still valid. If it gets below yesterday's opening price, it changed. So now we need to make a different distinction. I'm going to show you what that looks like. Okay. So as we work our way through, it's only one day. Remember, order flow stacking requires time to have conviction in the current trend continue. It's only one day, but what a fun day to trade. I'm actually going to highlight that because that was actually a really big statement. But what I want to get across here is order flow stacking requires time to have conviction. So think about this. If the smart money builds their position in pieces, which they do, they don't just go out to the market and say, hey, give me 5 million shares right now. They don't do that. And especially if you're watching time and sales, which is where the transactions are happening, most of the transactions that we're seeing are 100, 500, 1,000, 5,000, and they're printing all day. They're not just going out and saying, yeah, dude, give me 5 million shares and we're done. They don't do it. They work the orders, and as it moves in their favor, they start to continue to build because they believe in the future cash flow of where the stock is right now. So when you do the same thing, doesn't it make sense to do it exactly the same way that institutions do, which is learning how to build positions over time? So if order flow, and specifically order flow stacking, is us learning to read the tape and learning how to spot when the institutions are building positions over days, weeks, and months, that's where trading becomes easier because we're no longer guessing, we're just paying attention. Those that are struggling just aren't sure what to pay attention to yet. You might be all over the place trying to work really hard and read headlines and blogs and videos and all that kind of stuff. And that's good. But if you know what to look for and learn the process that I just showed you, or we're basically just talking about right now, then you don't have to rely on anybody other than yourself. Now, again, I show you how to do all this because I'm doing it right now, obviously on YouTube, but I'm also giving our community the list of stocks that meet this criteria and then showing everybody how and when to trade them. So it gives you a little bit more confidence when I'm walking you through the trades and actually giving you the entries, the exits, the targets, and all of that kind of stuff. So if you learn nothing else from me and you decide to just stay here on social media instead of joining me in the boot camp, just remember this. Trading becomes easier when you know what you're looking for. And what I'm looking for is I am looking for people with really deep pockets and teams of research to start building positions. And the longer they're building those positions from 1 week to the next, 1 month to the next. So now we're reading the order flow and we're reading the tape. We're looking to see, is it obvious and it's still valid? When we learn to do that, we're no longer guessing. We're no longer predicting. The only thing we need to do after that, when we learn how to do that, is the reward potential still good, which is the optimal entry, and how much are we willing to risk for that idea? Once you understand that, then trading essentially just becomes running a business, no different than when my family owned a deli and we had to buy roast beef. You had to spend money to buy roast beef. You have to buy the coffee, right? All that kind of stuff. You have to spend money to run the business. Sometimes when we run our trading business, sometimes they follow through and we have revenue. Sometimes a good idea doesn't follow through and we pay that expense. When you see it from that perspective, trading becomes a lot easier because now it's not you against the market. It's you really just paying attention to, is it still going and where's the right spot to get in? But you need to recognize how order flow works. When you stack the order flow, which again, let's really bring this point home. When you stack the order flow, essentially what you're looking at is, and let's use John as an example. John's here every day, right? John's here every day. Let's say John is building positions. Did John build a position 1 hour where maybe he had a big green hourly candle? Or did it last for 6.5 hours where he's really spending money, paying higher prices, holding higher bids? And then does he do it a second day? And then does it from Monday through Friday? That's what we're looking for. Now, there's more to it, obviously, but I want to let you know that it's probably easier than you're doing it right now. But that's only if you spend the time to understand what to look for. Now, I want to be clear about this. Making money in the market is a skill. It's not as simple as a bull flag or a bear flag, but you probably know that already, right? So learning what to look at is the first step. And and obviously having confidence that it works. And again, if you didn't happen to see that throughout the newsletter here, once you download this and you go into it, you'll actually have a chance here to see how our community is doing and actually seeing some of the wins and the money that they're making. So John Bates with a 4-figure day in an hour and 15 minutes. You can see by 11 o'clock, quarter to 11, he's ready to hit the road for the day. So it's one thing for me to say what we're doing makes sense, and a lot of people are having fun with it with the market. Download this document and see how other members of our community are doing and make a decision if you'd like to come and join us. You can get this document and you could learn about what we do. Our next boot camp starts shortly. It starts on Monday. So click the link below and get in there. But I want to just finish up with this because it's very important, okay? Learning what to look at and learning how to use it, it's not the same thing. And I'm going to really give you something to really think about. Think about when you started driving. You passed your road test. That was the written part. You understand what a stop sign looks like, right? But then you got to get behind the wheel. Driving is different than passing your road test. Learning what to look at is you're just understanding where everything is. Once we have some time to trade together and I walk you through good conditions, bad conditions, let's talk about cats, let's talk about holding profits, depending on the kind of market conditions, that's where you get control in the outcome, because now you're not trading for the sake of trading, you're trading because there's something to do. And recognizing that difference, and look, you can ask anybody in our community. I'm the first person to say there's nothing going on, and you'll hear me say this. PPC. I say this a lot. Right now, we're in preserve precious capital mode, PPC. And when that changes, I'll be like, belly up to the bar. There's something for us to do. And then we have deep discussions about what kind of ideas are the best ideas at that moment. These are the kind of things where if the market's a mystery to you right now, it just means that there's something you're missing. Maybe you're looking at too much. Maybe you're not sure what to look at. The stock market is a really fun place once you have that roadmap. So download this document, watch this video more than once. There's a whole breakdown in there. You'll see how other members of our community are doing. You can click the link below this video to get this document and take a look and see what's in the bootcamp agenda. It's 14 days. You get the entire bootcamp agenda laid out once you click through that page. All right. Thank you so much for joining me today. So remember what we're looking for. We're looking to read the tape today at yesterday's opening price. That's going to be the big line in the sand that we're going to pay attention to. All right. Have an awesome day, everybody. Thank you to our veterans. I'm so grateful. Thank you very much. And thank you to everybody who is with us here on YouTube. Have an awesome day, everybody. I'll speak to you soon.